Futures are adding to Friday's somewhat surprising gains. For more on the markets, let's bring in Tom Lee, head of research at Fundstrat and chief investment officer of Fundstrat Capital, as well as a CNBC contributor. Last time you were on, Tom, you said, I think we can, and it was definitely one of your what seemed like outrageous calls at the time. You said we'd be at 5,500 on the S&P. We should be able to get back there fairly easy. I think we were below 5,000 at the point. We did get close. We got another pullback, but after Friday, we're almost at 5,400 again. What was your reasons for thinking that? I think you just thought that maybe if you see a cat and you keep clapping, it'll jump the first time, but after a while, it finally just ignores you. Is that going to happen with the markets and all this tariff backdrop?
Yes. I mean, I think I know what you're saying, which is I do think markets are getting a little desensitized.
That's what I mean, yeah.
Yeah. And I think part of it is if someone had an investor hat on, not tactical hat, you know, really good opportunities are emerging because the number of stocks below the 200-day moving average was like 15%. Historically, that's a strong buy signal. I mean, you're going to find a lot of bargains there. And the VIX got above 50, and it almost always pays you to buy the stocks when VIX is above 50. But in the near term, it's a roller coaster. I mean, it does feel like we're having a lot of zigs and zags, and even over the weekend. But to me, I think everything that happened over the weekend, including the Sunday further explanations, all of this is still unequivocally positive for stocks.
Interesting. So when we were below 5,000 and you were on the S&P and you were at 7,100, that's like 40%. So you're now, and were you high, one of the high people on the street at 7,100? Were you there?
Well, our year end originally was 6,600, but we thought we could touch 7,000 mid-year. Okay. I think the 6,600 is still possible, but I do think the 7,100 mid-year is obviously it'd be very difficult to reach.
Recent data from Binance hints at a resurgence of buyer dominance, signaling potential bullish momentum in the crypto world. This development could potentially lead to a breakthrough above the pivotal $85,000 resistance level, setting the stage for substantial short liquidations amounting to nearly $637 million per CoinGlass. Welcome back to Investocracy Crypto.
But it's possible.
6,600 by year end. What about, you've made a lot of good calls based on moderating inflation. What did you make those numbers at the end of the week?
Well, I think that if we didn't have to consider tariffs, inflation is definitely tracking below expectations.
I mean, where the Fed wants it, almost.
Yeah. I mean, core inflation month over month at 0.00056. I mean, that's like literally hitting a wall.
Now, is that for good reasons or for bad reasons?
I think it's for the right reasons because...
Oil?
Yeah, well, there's oil and foods off the boil, but it really is shelter is actually cooling to a 2% rate, and that is what you need to get inflation back down to 2.
Do you, at this point, foresee the worst-case scenario in terms of dollar declines, 10-year yields due to people not... The Journal had an interesting piece today that it doesn't need to be that people just abandon the dollar and abandon the United States to invest in. It's just on the margin, because it's a given that you cannot ignore the United States as the elephant in the room globally for all these things, for the, the currency, investments. But on the margin, it could make a big difference if there was even a slight lessening of what we were used to.
Yeah, I agree. I think that is the narrative at the moment, that U.S. exceptionalism's over and people are selling treasuries and dollars to buy other assets. But I'm not in that camp that it's sustainable, because unless weaker dollar and higher yields suddenly makes the best companies in the world outside the U.S., the best and the most important companies in the world are American companies. They've produced the best shareholder returns. And, if you look at the S&P, 40% of the returns of the S&P come from new companies every 10 years. Is there going to be suddenly the best new company coming out of Europe instead of the U.S. because of the dollar, and I doubt it. And I think U.S. companies are going to adapt.
In the realm of the stock market, where fortunes are made and lost in a blink, the narrative of Bitcoin's revival is nothing short of captivating. Picture this. The cryptosphere is abuzz with activity akin to a high-stakes poker game where the players are none other than traders vying for supremacy in the volatile market. Amidst all this, a quirky joke finds its way into the conversation. Why did the stock market break up with the calendar? Because it didn't like dates. Jokes aside, the pulse of the market beats strong as Bitcoin stands on the cusp of a breakthrough.
Welcome back to Squawk Box this morning. I want to take a look at the crypto market right now. Anthony Pompliano is here. He's the founder and CEO of Professional Capital Management. Bitcoin now sitting at about, what, $85,000, $86,000 after touching, what was the most recent low? We're going to say about $76,000.
Correct.
Where are we going here? And how are you thinking about Bitcoin relative to gold in this particular moment?
Yeah, I think that's what everyone's really talking about right now. Bitcoin is down about 10% to start the year. Gold's up 20%. But if you look out over 1 year, they're both up about 35%. So it's pretty interesting that there's been this divergence. But if you go back and you take a look, you can actually see that gold usually leads these rallies. Okay. And nobody really knows why that happens. My kind of guess would be that a lot of the central banks and institutional investors, they're either not approved to buy Bitcoin or they're not used to running to Bitcoin in these moments of kind of geopolitical uncertainty. What we do see, though, is when gold runs, about 100 days later or so, Bitcoin not only catches up, it usually runs much harder. And so you get that kind of higher volatility.
How much are you seeing people either buying or selling Bitcoin direct, meaning actual Bitcoin, versus playing the ETF market, and the ETF market effectively buying the Bitcoin or selling the Bitcoin on their behalf?
Yeah, I think you get both now, right? It used to be obviously all retail and all direct in spot market, but I do see a lot of people using these ETFs. And I think what a lot of people kind of missed over maybe the last couple of months is there was a sovereign wealth fund that came out and said, hey, we actually got Bitcoin exposure through the ETF. And the reason why I thought that was interesting is there's a lot of conversation about Bitcoin and the geopolitical kind of debate, if you will. And one of the things is if you are buying Bitcoin and you're actually taking control of that Bitcoin in a self-custody way, you may be doing it for things other than price. You may be worried about the U.S. Treasury market or maybe sanctions or something like that. But if you're buying Bitcoin via the ETFs, you're simply just getting price exposure. You're not actually doing it from a geopolitical strategy standpoint. And so I think there's a lot of countries around the world that are saying to themselves, well, if the United States has a strategic Bitcoin reserve, they're openly talking about the fact that they're going to go buy more, we should have a Bitcoin strategy. Doesn't mean that we have to buy. We could just sit it out. But we need to have a decision here. And buying the ETF allows me to get price exposure, but not actually take on the geopolitical risk of having to talk to.
The tides are turning, evident from the data that shows a rise in bullish sentiment. Darkfost's analysis of the Binance taker-buy-sell ratio sheds light on the current scenario. With a ratio hovering at 1.008, the balance tips towards the bulls, potentially propelling Bitcoin towards new highs. But before going any further, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
So I went down to Washington, D.C. last week to the White House. I interviewed Bo Hines, who's the executive director of the President's Advisor Council for Digital Assets. And I explicitly asked him this question. And the thing that he said to me that I think kind of took away was not only are they going to have the Bitcoin Strategic Reserve, which we have, they are going to buy as much Bitcoin as they possibly can. And
with what money? And does that have to be authorized by Congress?
So there's a bunch of different ways they could do it. I think what they're trying to figure out is what is the best way to do it. And so a couple of examples would be they could revalue the gold, they could sell some of that, they can then go and they could buy Bitcoin.
Does that have to be done with Congress's approval?
There's a debate around who would be responsible, who would be involved. And they have
all this has to be done with executive order? I mean,
well, they have an interagency group right now that's working together. And so at that table is everyone from energy policymakers to law enforcement to economic advisors. Kind of everyone is trying to figure this out. I don't think you're going to see kind of very rash decision making kind of unilaterally, but I do think that working group is trying to figure it out. But you also have things like the tariff revenue or other areas where we may be saving money that we previously were wasting or abusing. And so I think that is probably, to me, the thing that the market most misunderstands is it's not just, hey, we're going to hold the Bitcoin. They're going to actively try to buy Bitcoin. And there's other countries around the world, they may be acquiring Bitcoin by mining and using natural resources that they have there. And so I think there's a lot of strategies here that the U.S. is going to pursue.
As the curtains draw on this enthralling chapter in the history of Bitcoin, one thing is certain. The stage is set for a grand performance. The potential break above $85,000 looms large, beckoning investors to seize the opportunity presented by the market's resurgent bullish sentiment. So, dear viewers, as you reflect on this tale of market ebbs and flows, videos, we invite you to share your insights. Will Bitcoin scale new heights? Can the bulls maintain their momentum? And finally, if you would like to know more about cryptocurrencies or specifically Bitcoin, go ahead and click on the next video on your screen. See you there.